Hi, it's Mine Crypto here. I hope we're having a wonderful morning, afternoon, evening, wherever you are in the world.
Remember, this isn't financial advice. Always do your own research.
Mine Crypto here. I hope we're all having a fantastic day. And the title of the video is Gilbert'S Master Plan. But first and foremost, we look at the crypto bubbles. We are ranked 36 with a market cap of 1.2 billion, a 24-hour volume at 8.7 million. We're currently sticking around that $100, just below at 99.63. We are currently up 0.2 in the hour, up 0.1 in the day, down 4.7% in the week, and down 3% in the month. And as you can see, it's looking a bit mixed. There's been some movement on some coins within the market. Some have taken a loss, some have actually picked up. It is what it is. But anyhow, so I see this tweet from Just a Tech Guy. 99% of crypto does not understand this either. And what he's referring to is R3 CEO said CBDCs are not evil as Republicans crash in the first primaries. CBDCs are definitely not evil. The CEO of R3 told DL News on the back of several attacks against the idea of the Federal Reserve run. Now, yes, there is a worrying factor to CBDCs, as we see here from Dominic. I have a vested interest in CBDCs as well, heavily invested in Quant, but I do see the concern. Other than mentioning that the government already uses surveillance on digital payments today, there isn't much being said to address the potential concerns of smart contracts and payments. So shutting off wallets, turning on wallets, allowing spending for specific verticals or items, etc. I think this is a valid privacy concern to share, in which I haven't seen any significant insurance against. Take China, for example, as the social credit system. There are clear good use cases, and there are fears when it comes to CBDCs. It could very well be a far-sighted fear that never manifests, but it's a capability CBDCs will have, and justifiably a concern many have. CBDCs will take their surveillance and governance to another level. That's definitely a valid concern. Just the Tech Guy replies, I think the point is the technology is not the concern, governance is, and Dominic agreed. And I'd have to agree with that too. I won't go into the article because I think it is quite straightforward. So yes, CBDCs are a concern. The way I see this is enjoy the ride or get dragged along. Suffering is our psychological resistance to what happens. That's the way I see it. I'm just positioning myself with the technology that I believe will play a major role in the coming years. Remember, this is not financial advice. I'm not a financial advisor. You should always do your own research before investing in any project. And then I see this tweet from Construction Trader ETH. Alongside the Bank of England, the BIS and the Digital Pound Foundation, Quant is creating a new form of money which will be used as a standard for generations to come. This new form of money will be embedded into everything core banking system worldwide. Wow. Let's have a listen to this.
We are joined by Gilbert'S, founder of Quant and chair of the UK's National Committee on Blockchain and Distributed Ledger Technologies. Central banks such as the Federal Reserve, the Bank of England and the People's Bank of China are piloting central bank digital currencies, or CBDCs, their answer to blockchain-based innovations such as Bitcoin and Ethereum. Critics argue CBDCs could increase government surveillance as transactions can be easily traced and also programmed, giving possible control over how, when and where users spend their money. Today we'll discuss the development of a digital pound and the potential of CBDCs to transform the financial landscape. Gilbert'S, welcome to this week's episode of the Crypto Mile.
Brian, thank you. It's great to be here.
Gilbert, let's begin with, is there a need for CBDCs? Are CBDCs, central bank digital currencies, are they really a solution looking for a problem?
I think we need to evolve money. The current form of money is not purely a digital form of money, it's electronic. And it was invented 30 years ago when we moved to electronic finance and electronic money. So as society, we've become very digital in terms of the way we interact, the way we transact, and having COVID accelerated that adoption to digital. So we think money is not fit for purpose. The current form of money is not fit for purpose. And we should have the opportunity to evolve it to be something that is fit for the future and appropriate for a digital society. So it is a solution that we are looking at. And is it a solution to a problem? I think so, because society is asking for it and business is asking for it. We've seen a lot of consultation from the Treasury and from the Bank of England on CBDCs, but they've been mainly economic and policy driven to understand what does this mean from an impact perspective to the country, what does it mean for consumers, what does it mean for businesses. And what we're seeing now is the actual implementation and the testing of a real CBDC. And that's the work that we've been involved in with Project Rosalind, with the Bank of England and the BIS, where they've moved away from just the economic and the policy thinking to the practical. What does a CBDC mean for a bank? What does it mean for a consumer? And they were all tested as part of the project, and it is an ongoing project. So the deadline that the Bank of England has set is by the end of the decade. When they decide, or if they decide they want a CBDC, it will be implemented by then. But for the first time, we actually have the opportunity for commercial banks to be ready for CBDCs, to be ready for a new payment infrastructure, and they have a seat at the table. They are actually working alongside regulators and co-designing and co-building this new infrastructure, which they will all be using for the next generation of money as CBDCs. It's a new form of money for commercial banks to embed within their core banking systems and offer new forms of product and new forms of payments and new forms of lending, which they couldn't do before with the legacy form of electronic money. So the legacy money that we've been using today is binary. It's a push and a pull, and that's the most it can actually do. But now moving to digital money from blockchain-based technology to CBDCs to tokenized bank deposits, we're able to code logic into money, to automate lots of things, to get it to do new types of payments, new types of lending, new types of products. And the banks are all behind it because it allows them to really innovate. They can offer different types of payment products. They can take a lot of friction out of the system, and they can streamline how business and consumers deal and transact with money in a new way.
There you go, guys. Straight from Gilbert Verdian's mouth. This new form of money will be embedded into everything core banking system worldwide. And that's absolutely huge. Even before the CBDCs come about in 2030, the banks are already playing a part in this process. And I posted this tweet earlier. Gilbert Verdian just loves dropping these tasty crumbs, and in brackets, actually the whole cake, the master plan. This was a clipping from the CNBC website, how big banks like JP Morgan and Citi want to put Wall Street on a blockchain. Investors at the New York Stock Exchange trade upwards of 1 billion shares in a single day, but many of those trades take days to settle. Big banks like JP Morgan and Citi think they have a solution, and they need to borrow a tool from crypto to make it happen, blockchain. Citi thinks tokenizing assets on the blockchain could be a $5 trillion industry by 2030, but tight regulation of markets and a crackdown on crypto from the SEC could slow the adoption. And then we see this from Gilbert Verdian, which is a clipping from Telegram, so I do apologize for the quality. You know, we had that discussion with a very large US financial services company last week. I think it's time to realize and acknowledge that traditional FS companies are very active in this space right now. They bring regulation, governance, and mass market capabilities with lots of institutional and retail clients. The news in the last couple of weeks with JPM, Fidelity, Digital Asset, SIX, Deutsche Börse is a pivotal moment where digital assets are accepted and embraced. It's going to get bigger. Gilbert goes on to say, this is our approach. We're bringing everyone together and interconnecting traditional financial infrastructure with new decentralized finance infrastructure for the first time. Imagine the possibilities of thousands of financial service clients and institutions using decentralized blockchain safely and easily through Overledger. The use cases are huge. He goes on to say, by coming from the regulator, we love what is happening in regulation. It's something the market needed to help clean up the dishonest and bad actors. Now we're seeing the institutions stepping in and innovating at scale. We've all been hearing what the likes of Fidelity, SIX and NASDAQ, etc. are making public. That's just the start. There's so much more activity in progress that we all don't know about, which will be revealed this year. We're working on being the financial infrastructure to move digital assets between networks. There's a lot of activity in this space by banks. We're making QNT the way to sign, encrypt, and secure digital assets to move them between banks, making it a universal utility token. Can you imagine QNT moving JP Morgan coin to another bank, or Facebook's Libra coin? All of these need interoperability to transfer between parties. We're making that a reality. Wow. And as always, dropping these little crumbs as a way to let us know what is likely to happen in the near future. So there you go, guys. Just a quick bit of news for you. Remember, please subscribe. Please hit that notification bell so that you don't miss any further videos. All the best, and I'll catch you later.
Remember, this isn't financial advice. Always do your own research.